Leonard, thanks for joining me. I guess with everything going on in global trade at the moment and all the uncertainty and tariff talk and everything else, we thought it was opportunistic to get our biggest port to come and have a yarn to us. So maybe we can start there for you to just give us a sense of what is going on in global trade and what you're seeing out there.
Yeah, thanks, Mo. Look, I guess it's probably the word is it's uncertain at the moment. We're in pretty interesting times in terms of obviously some of the geopolitics and what that's causing in terms of some of the tensions around the world, whether that be through US trade tariffs, bouncing from one week to the next at the moment, or whether it be some of the broader, challenges around the likes of the Red Seas, Houthi rebels, etc. That's certainly has had a significant impact in global supply chains and shipping, where I guess being a long way away from some of those markets, we're a little bit more insulated. But that being said, we certainly still have felt some effects.
Yeah, and there's been quite a volatility in, I guess, pricing for container rates and things like that. Doesn't necessarily impact you directly, but it does impact your customers. Do you see any change in sort of their behavior? Do they hold off? Are they, do they try and work around pricing, or is it just carry on as usual?
Oh, look, I think there's probably a bit of both. And what I mean by that is that if you look at the US trade tariffs, we've certainly seen in terms of international shipping prices, the US-Asia rates have just fluctuated enormously from week to week when the tariffs are on. And at the moment, there was a $9,000 increase in a 40-foot container rate overnight.
Wow.
From US to Asia. Of which, it may be gone in a week's time when the tariffs come out. There's still 300 vessels globally that are impacted by US marine charges, so vessels that are not built in the US or built in China in particular that attract higher marine tariffs. All of those things are playing out still in the US. In terms of New Zealand, we've probably seen it more around the impacts of the Red Sea and the additional vessels that have been deployed into the Red Sea trades.
Right.
What that's meant is ultimately it's artificially used more of the global shipping capacity and therefore by default has gone to higher than what you would otherwise expect freight rates, shipping rates.
And we've seen our commodity prices rebound. We've seen some of the commodity volumes come back, which is nice to see. So just remind us, what are the big products that are going through your port day to day?
Yeah, it reflects the fabric, I guess, of New Zealand's exports. We're New Zealand's largest port, obviously by quite some number. We handle about 70% of New Zealand's export dairy goes through the Port of Tauranga. 65% of New Zealand's red meat exports through Port of Tauranga. Obviously, given our location, the vast majority, close to 90% of Kiwifruit are exported through Port of Tauranga, and about 30% of New Zealand's export logs move through Port of Tauranga. So quite a significant component of, I guess, you've got your forestry fibre products, your dairy exports, your red meat, and in terms of horticulture for us, the majority of it is kiwifruit.
And for you as a business, you're kind of indifferent to what those commodity prices are, aren't you? You're more in the volume game, so it's more throughput rather than what the end price that those commodities are capturing?
I guess there's probably two parts to that. Some of the commodity prices for dairy and for kiwifruit and for red meat in some respects are less of an impact from a volume throughput perspective because it really goes to they're still exported year on year. Whereas if the commodity prices for logs, for example, you can not harvest a log tree for 5 years if you choose to.
Right, so there's a bit of subtlety there. Yeah. And you are so big, at least in the context of New Zealand, and all of these products going through. Where are you in terms of, can you automate things and kind of get a bit more efficiency out of that?
Yeah, absolutely. I mean, I'm sure we'll touch on it. We've had some constraints around consenting framework in New Zealand has been very challenging for us, particularly in Tauranga. But we have plans to automate the container terminal. We will be looking to introduce automated stacking cranes or ASCs. Effectively, what that does is it intensifies the area. So at the moment, we use manual straddles, and a straddle can stack 2 high effectively. When we move to auto stacking cranes, it's up to 6 high and 10 containers wide.
And I guess you're not exactly breaking new ground here. You must be sort of looking at other parts of the world where this is already deployed. So it does probably take a little bit of that risk away of this new investment if and when it comes, because you've seen it working other places?
Yeah, absolutely. What we're not looking to bring in world first technology here. Auto stacking cranes, or ASCs as they're called, they've been used in global terminals around the world for over 20 years. So, it's not new. What is changing at a rapid pace with the introduction of AI is just the efficiency of these systems. They are continuing to become more efficient. The way to think about it is that, there's AI used in between ship side and land side, and the organizational optimization of the yard is all done through effectively AI.
Right, so far more efficient through that. Yeah. Right. And I guess the other thing that's probably changing a little bit is obviously more of that AI and automation and so on, but also ship sizes. It's, I'm guessing things are only getting bigger. Like some of the cruise ships we see come into port are pretty massive. I imagine the cargo ships, the new ones being built, aren't getting any smaller either. So does that present any challenges for your port, or can you sort of cater reasonably big sizes?
We're really well positioned for larger ships. We are expecting larger ships. I think, interestingly enough, December 2024, largest order book on record from a global shipping perspective, 8.3 million TEU or 20-foot equivalent unit capacity of order book. 92% of that order book is for container vessels greater than 8,000 containers.
Right.
So there's no question the container vessels are getting larger. We're really fortunate in Tauranga. We hold an existing consent to undertake capital dredging. We've already done half of it, so we can bring container vessels in with up to 14.5 metre draft. Moving forward, we will be able to bring in container vessels with up to 16 metre draft.
Right.
So really is going to give us some headroom with the available channel we have.
And would that, it's obviously going to take some time for those bigger fleets to upsize, those new ships to come to market, but does that present some challenges for some of our other ports, or is everyone kind of on that same playing field in terms of the drafts that you have?
I think from a New Zealand Inc. perspective, we can't. We got limited capital available from a New Zealand perspective. We can't have every port in New Zealand investing to take the large ships. It's not to say that every port in New Zealand doesn't have a role to play, but over time we think coastal shipping is going to become play a much greater role in helping the New Zealand supply chain.
And I imagine those bigger ships don't necessarily want to be making 3, 4, 5 stops in New Zealand either. They would rather that be aggregated somewhere, and for them to make a more efficient.
Absolutely. It goes back to cost and efficiency. It simply can't afford to have one of those container vessels spending 7 to 10 days on the New Zealand coast. You're talking hundreds of millions of dollars of capital tied up doing that,
right,
versus one call and using a coastal feeder to go and to connect it.
And at the moment you do that, don't you? Because you report some transshipment volumes, and they're a reasonable amount, sort of 20-30% of your volumes?
About a third of our volume now. And what's really interesting is that when we actually look, the big jump we had from 2016 to 2017, and you're going to say, well, what happened? Well, the only thing that happened is that we introduced the 9,500 TEU vessels calling Tauranga and Tauranga only, and the only thing that happened is we transshipped more containers to connect into those vessels. And the reality is they simply couldn't fit at any other port in New Zealand.
And look, you're obviously best known for those Tauranga operations, and it is a big part of the overall business, but you do have some other investments out there. Can you just sort of remind us of a couple of the key ones that are out within the wider stable?
Sure. Well, we have investments in other port companies. So we own 50% of Prime Port Timaru and Timaru Container Terminal here in the South Island. Up at the top of the North Island, we own 50% of Northport, and we're just going through a process at the moment to acquire to bring together the Northport and the Marsden Maritime Holdings business together. So that process is underway at the moment. Obviously, we have inland ports, Christchurch, Auckland, and our newest inland port with Tainui Group Holdings at Ruakura Inland Port. So those businesses for us, those joint venture businesses, are working extremely well.
Yeah, I suppose it's good to hear that, because you sort of start to appreciate that there's a real network here, isn't there? It's not just one infrastructure asset sitting in Tauranga. It's actually a whole web of assets that come together and help the port
Absolutely. I think, it's important from a supply chain perspective. Ports don't operate in a silo.
Yeah.
We need to be connected, whether that be multimodal, road, rail, coastal. We need to have the inland port network to support that infrastructure at the gateway.
Yeah.
All of those things actually become help to create a lot more resilient supply chain.
Yeah, and you mentioned infrastructure, and I know this can be red rag to a bull for many businesses out there at the moment, the frustrations around infrastructure, but it's vitally important to you, especially sort of rail infrastructure and those other feeder ports, I suppose. So how do you sort of rate that at the moment in terms of, I don't know, out of 10, or what are the key things you want to see improved across our infrastructure?
Look, I think no question from our perspective, we've been 6 years at a resource consenting process through the RMA. With the new government, we are now in the new fast track process.
Right.
It's fair to say the previous process under the Resource Management Act was glacial at best, and it's been extremely frustrating. And ultimately, it's cost New Zealand and New Zealand's importers and exporters in terms of cost with available capacity. We have very limited capacity at the container terminal now. That has taken away options for additional services into international markets.
Right. And remind me, if you sort of got the green light now, how big is that berth extension? I think it's sort of 250 meters plus. And how long would it, if you broke ground today, how long would that take to kind of get up and running?
So the consent's just for building berths on the Tauranga Container Terminal at Sulphur Point on the wharves there. The consent is for up to 385 metres. We would build 285 metres initially, and we'd do that as quickly as we can. In terms of how quickly we're able to activate the project, it would be probably 6 months to stand up the project after we get a consent.
Right.
The challenge has been, we were ready to go back in 2019, 2020. But it's a 2-year build time. And that 2-year build time, it doesn't really matter when we start.
Sure.
After we get that green light, it's 2 years.
Yeah. And that'll give you sort of another 20% extra capacity or potentially more?
Not quite. Yeah, it's not quite linear like that. It's actually, there's a big jump because it's combined with automation. So what we're looking to do is we need to build a new berth, and then that will create behind the new berth, we'll create the capacity with automation, automated stacking cranes in our first stage of automation to actually then intensify the yard. So it's an additional berth. So, we're sitting at around 1.2 million containers a year at the moment.
Right.
We think with the new first stage of automation and the new berth, we'll be somewhere around 2.
Gee, so that is a big leap, and that kind of creates a pretty good runway for the commodity growth in New Zealand, doesn't it?
Yeah, absolutely. And I think, there's the export commodity growth, which, we're certainly hoping will continue to grow with some of those regulatory settings that might be tweaked, but also significant growth in imports as population in particular into the Upper North Island keeps growing.
And I guess you talk to a lot of your customers are those key commodities in New Zealand. You see a lot of product go through the port. You got a sense of, just interested in how you're feeling about New Zealand and our economy at the moment. We've had some pretty big interest rate cuts, a couple of tough years for the domestic economy, but it feels like things are at least getting up off the canvas and improving. Is that how you're seeing it with your customers out there?
Yeah, it's kind of I'd almost put, there's a bit of a 2-tier economy. And what I mean by that is that from a regional export basis, commodity prices is actually going quite well. Commodity prices have been strong, and exchange rates generally been pretty favourable from a New Zealand exporter perspective. And then you've actually had, reasonably good, years in terms of production, whether that be through kiwifruit, dairy, our red meat. But I guess what we don't see is that the domestic consumption side, which is more imports, that has been pretty lackluster and a little bit flat. We are certainly hoping that some of the tweakings around some of the interest rates may actually stimulate a bit more demand. But at the same time, I guess with international trade and I would have said New Zealand, we were seeing a few green shoots in that domestic consumption, and then obviously we had the impact of Trump and the tariffs.
So there's a bit going on there, but interesting that it feels like the export side just rolls on regardless, and the import side is where you might see a bit more fluctuation depending on the economy here.
Yeah, and that's certainly how we've seen it with our volumes through the port. It has really. It has really kind of underwritten that, exports really in our primary sector, exports really are the backbone of New Zealand's economy.
And look, before I let you go, I just want to ask you one more. You've been in the hot seat as the listed CEO for a little while now. What's it like? I guess leading a listed company. What are the challenges or the the rewarding stuff, I suppose, of being in that listed market?
Oh, look, it's been great. I guess for me, one of the things that a listing does is it really drives that clear accountability and transparency. And I think for me,
some hard questions from time to time.
Absolutely. But I think it's kind of, your ability to go and respond to, I guess, or the ability for the market to respond to your decisions means that you need to be really clear, concise, and crisp. And in that respect, that level of transparency and accountability, we really like that.
Yeah.
It forces good capital discipline. It does then also open up the ability to tap into capital markets a lot more readily as well. In terms of challenging, I guess some of the challenges around that is that from time to time you are chasing quarter to quarter or year to year results. And when you're a port business that is long run infrastructure, it's generally not dealing with quarterly cycles or annual cycles. Some of the strategic investments and strategic initiatives we need to make are longer term. So it is about that balance between the two. That being said, as long as we're really clear and articulate our strategy well, I actually think the listed environment's been really good for the business.
Yeah, it's just, I guess, that explaining and people understanding the journey that the port is on, and that it is, like you say, a multi-decade story, isn't it? Nothing's going to turn on a dime for a business like yourselves. It is a long-term thing, isn't it?
Yeah.
Oh, look, that's brilliant. It's great insight and very topical at the moment with everything going on. So appreciate you coming along and having a yarn to us. And I know soon you'll be up on stage presenting to our 600 clients down here in Christchurch. So I'm sure they're looking forward to hearing the story from yourself again.
No problem at all. Thanks very much.
Thanks, man.
Cheers.